Great question. Let's break down Peter Lynch's style of company valuation. Peter Lynch, famous Fidelity Magellan fund manager, was known for simple, practical approaches to valuing businesses rather than complex formulas. He emphasized understanding the business first, then using a few key metrics to decide if it's undervalued. Steps to value a company using Peter Lynch's style. Understand the business. Invest in what you know. Lynch believed the best edge an investor has is spotting good companies in everyday life before Wall Street does. If you understand how the company makes money, you can judge whether its growth is sustainable. 2. Check the growth rate. Lynch categorized companies: slow growers, mature low growth, e.g., utilities; stalwarts, steady growth, 10 to 12% per year, e.g., Coca-Cola; fast growers, 15-30% annual growth, smaller companies; cyclicals, earnings rise and fall with cycles, cars, airlines; turnarounds, struggling companies with recovery potential; asset plays, hidden value in assets, real estate, patents, cash. Nasher 3, use the PEG ratio, price earnings to growth. This is Lynch's signature metric. PEG frac P text ratio, earnings growth rate. PEG 1, fairly valued. PEG 1, undervalued, attractive. PEG 1.52, possibly overvalued. Example, a company has PE equals 15, growth rate 15%, P equals 15, where 15 equals 1 fair value. If growth equals 25%, PG equals 0.6 undervalued. Check the balance sheet. Avoid heavy debt. Lynch-like companies with manageable debt compared to equity. Strong cash flow and low debt make downturns survivable. Look for the story. Ask yourself, what makes this company grow? Can it keep growing for 5 to 10 years? Is the business model durable? Do the backyard test. Lynch often said, if you can explain why you own the stock to a 10-year-old in 2 minutes, you understand it well enough. Number 7, red flags Lynch avoided: hot tips, fads, and companies you don't understand; overly complex businesses; high PE with no growth, PEG way above 1. Summary formula in Lynch-style value: earnings growth rate compared to PE ratio. If PL 1 and the story is strong, buy. If PEG 1.5 and story is weak, avoid. Would you like me to make a step-by-step example with a real company like Apple, Tesla, or an Egyptian stock, so you can see how to apply Lynch's method in practice? Perfect. Let's do a real step-by-step example of valuing a company using Peter Lynch's style. I'll show you with Apple, AAPL, because it's well known. Then we can also try with an Egyptian stock if you want. Example, Apple AAPL, numbers are approximate for 2025, rounded for simplicity. 1. Understand the business. Apple makes iPhones, Macs, iPads, wearables, and services. App Store, iCloud, Apple Music. It's a stalwart, large, steady grower, but also still innovating with services ecosystem lock-in. 2. Growth rate. Past 5-year earnings per share growth 12% annually. Expected future growth, analyst estimates, 8 to 10%. 3. PE ratio. Current price, $220. EPS last 12 months, 7.20. PE equal 2230.2. PEG ratio. PEG. Growth rate, 10%. PEG equals 30.5 or 10, 3.5. PEG remains overvalued by Lynch's rule. 5. Balance sheet check. Apple has low debt versus cash flow and massive cash reserves. Financially safe. The story. Growth is slowing compared to the past, mature market. Services are growing faster, but iPhone still dominates. For Lynch, Apple today is more of a stalwart, not a fast grower. Chash. Lynch's verdict on Apple, 2025. Great business, but stock looks expensive, PEG 3. He would likely wait for a cheaper entry point or prefer faster growers with PEG 1. Quick Egyptian example. Commercial International Bank, CIB Egypt. Numbers are illustrative, not exact. Would need to pull fresh financial data if you want precise values. PE 7, earnings growth, 12%. PEG equals 7 and 12, 0.58, undervalued by Lynch's rule. Strong story, leading private bank, consistent earnings, low PEG. Lynch would find this attractive. Key insight. Apple PEG 3 equals overvalued. CIB Egypt PEG .6 undervalued. Would you like me to pull live financial data, growth, PE, EPS, for a specific Egyptian stock you're interested in so we do a full Lynch style valuation together?